Hey, hello investors and future investors. Welcome back to the channel. In today's video, I'm going to be showing you how I use LEAPS option trading in order for me to maximize my returns using my own portfolio. Now, why do you want to learn LEAPS option trading? Well, LEAPS option trading will help you grow your portfolio exponentially. Now, if this sounds like your cup of tea, then welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors, and let's start off with the basics. What are LEAPS? Well, LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. It is a mouthful, yes. That's why we all say LEAPS. Now, here's a fun fact. If you have one contract, that's going to be a LEAPS. If you have five contracts, it's still going to be a LEAPS. It does not change. Now, you guys know how we do it on this channel. We like to get down and dirty with options, meaning we like to show you exactly what we do in order to utilize this strategy, and that allows you to follow along with us and then later on go practice this in your own portfolio. As usual, always remember to do your own due diligence before investments. So for today's video, we're going to be using one of my favorite stocks, which is going to be Micron, ticker MU. Okay, so firstly, now we're going to get down and dirty with options, and I'm going to show you what LEAPS options are. Then I'm going to show you how to use LEAPS options. And then finally, I'm going to show you three strategies that can be used once you have acquired a LEAPS option in your portfolio in order to generate consistent income. Now, in order for you to perform a LEAPS, we're going to have to go to Trade MU options down to your bottom right if you're using a desktop. If you are using a mobile phone, this becomes way easier. Now, we always make sure it says buy and call. And now we're going to proceed to choose our strike date. Now, in order for it to be a LEAPS option, it has to be 6 months or more in the future. So for today's video, I'm going to be using July 18th, which gives us 241 days to expiration. So this is well within the realm of a LEAPS option. Prior to a couple of years ago, a LEAPS option was described as any long call option a year and above. However, that has changed, and you could experiment with this in your own portfolio. So now that we have selected buy and call and we have chosen our long date, which is July 18th, 2025, now we're going to go ahead and we're going to choose our strike price. Now, in order for LEAPS to be the most effective, it is highly advisable that you choose a strike price which is going to be in the money. For those of you who don't know what in the money is, it simply means any price traded below the $95 strike price here. So any price below the strike price is going to be in the money. Now, just for clarification purposes, the $95 strike is what's going to be known as at the money because it's the closest strike price to the share price of $98 per share. Now, if you were to acquire 100 shares of Micron right now, it would cost you $98 per share, as you can see here. So that is actually going to cost you $9,800 to acquire and control 100 shares. With the LEAPS option trading, I'm going to show you how to leverage a lot less buying power in order for you to control the same 100 shares. So let's continue going down. And now I'm going to go ahead and select my strike price. So I think I'm going to be going with the $85 strike price. And for the $85 strike price, I'm going to have to pay 22.9, or in option terms, $2,290. Each option contract is multiplied by 100 shares. So let's go ahead. We're going to click into it. And if you see to the top here, it says a long call or a LEAPS option. Now, why did I choose the $85 strike price? Well, in order to answer that, we're going to go ahead and click into the strike price, and that's going to open up the Greeks. So the Greeks is part of the option chain that allows you to make a rather very informed decision. Now, when choosing a LEAPS option strike price, it is advisable that you do your own due diligence and buy based on your own risk tolerance. When it comes to my personal preference, I love picking up LEAPS at a delta of 0.70 or higher. As you can see here, this delta is 0.73, which is higher than 0.70, so it fits right into my perspectives. Okay, so now we're going to go ahead, we're going to hit continue. Now, like I mentioned, you will now have to pay $2,290 in order for to control 100 shares of Micron. Be very careful. I am saying control 100 shares, meaning you do not own 100 shares, but you are able to control 100 shares. Now, why would you want to control 100 shares? Well, firstly, it's based on a cost and leverage basis. Like I said, if you were to pick up 100 shares of Micron right now, you'd pay $9,800. You now have the same controlling interest in 100 shares, but now you're only paying $2,290. That rest of the money, the difference between 98 and the 2290, can be used for you to implement other strategies in your portfolio. So if you're liking this video so far, now would be a good opportunity for you to go ahead, like the video, subscribe to the channel, and if you have any questions concerning the LEAPS option, let me know in the comments below. So one of the other reasons that anyone would want to purchase a LEAPS option is because of the longer time frames. With the longer time frames, it provides you with more stability compared to short-term options. So for instance, the market fluctuates, it goes up and down. That's just what the market do. Now, if you were to have a LEAPS option expiring a year and beyond, then you're more able to weather those ups and downs that happens in the short-term nature. Now, the third reason anyone would want to choose a LEAPS option is because it offers you lower risk compared to your initial capital. Now, this one is up for argument, but I agree with this because, like I just showed you, you're now paying just a fraction of what you would have paid in order for you to buy 100 shares. So right away, the risk in your portfolio goes down by at least 2/3. Okay, here's the big question. How do you know what strike price to use when buying LEAPS? Well, that's simple, and I'm going to show you right now, and we're going to change the stock. We're going to use the SPY. Okay, so here we are on SPY, the Spider ETF, and we're going to go ahead and open up the options chain by going to Trade SPY Options. And once again, we're going to go to buy and call, and we're going to choose our expiration date. When choosing your expiration date, feel free to choose any expiration date of your liking. It just must be 6 months or beyond. Okay, so I'm going to go with, let's see, we're going to go with June 20th, 2025. That gives us about 213 days to expiration. So this is how you go ahead and you select your strike price. Once again, always try to choose your strike price below the current share price. Can you choose the strike price above it? Absolutely. Is it going to be beneficial to you? Most likely not. So we're going to go ahead once again and choose a strike price below the current share price. And I will be going with the 540 strike price. Now, how do I know this is the correct strike price for me? Well, once again, I'm going to go ahead and open it up in order for me to see the Greeks. So here it is open, and I'm going to look for my delta. My delta right away is 0.80, so I know this is a very good LEAPS for me to pick up. Why do I know it's a very good LEAPS for me to pick up? Because it meets my criteria of a 0.7 delta or higher. 0.8 is way higher than a 0.7. So that is how you go ahead and you choose the correct LEAPS. Okay, so now you have decided how to go ahead and choose your strike price. What is the next step? So let's go ahead. We're going to pretend we're going to finish up this trade. We're going to go to continue, and voila, you have now acquired a LEAPS option on the Spider ETF in your portfolio. But what is the benefit of having a LEAPS in your portfolio? Well, here it is. There are 3 strategies which I recommend that can be used in order for you to generate consistent income with a LEAPS option. And I have been doing this for years, so I know it works. Strategy number 1 is going to be a LEAPS covered call. So what is a LEAPS covered call? A LEAPS covered call is when you're able to use your LEAPS option in order for you to sell regular covered calls 1 week, 1 month, or probably 3 months out. It all depends on you. Let's go ahead. I'm going to give you a quick example. So let's pretend you do have 1 LEAPS of SPY in your portfolio. Now you're going to go ahead to sell and call, and then you're going to choose a much closer expiration date, because now you're going to be doing this on a regular basis. Let's go with November 23rd. And now you're going to go ahead, you're going to choose your strike price above the current share price. And voila, you just made a little bit of money using your LEAPS option. We're just going to go with the 201 because this is just for an example. We're going to go with the strike price of $594. That's going to pay you $2.01, which works out to be $201. Okay, we're not going to dwell on this very much because I have several videos on this on the channel. Now, strategy number 2 that can be used if you're using a LEAPS option is going to be a LEAPS calendar spread. This one is not advisable for beginners, but a LEAPS calendar spread will also allow you to make regular income using your LEAPS option in your portfolio. And a third strategy I would recommend for using LEAPS option strategy is going to be a LEAPS as a stock replacement. And I have said this twice in this video. This is the third time I'm going to repeat it. If you're trading with a small account, which is my specialty, it's way advisable for you to use a small part of your portfolio and use it as a LEAPS option, as opposed to using the majority of your portfolio to own 100 shares of the stock. Like for instance, the stock we just used, which was Micron, is going to cost you $9,800. Consider replacing 100 shares of stock for $9,800, which is going to cost you, for a LEAPS option, which is now going to cost you $2,290. So that is the first strategy you could use with a LEAPS option, which is replacing your stocks with a LEAPS option. Now, with everything and with every investment, there are risks. So what are the risks of owning LEAPS in your portfolio? Well, now that you have LEAPS in your portfolio, how are they risky? Well, they can become risky when the market fluctuates up and down. However, you are protected because it's a long-term play. So by buying a LEAPS option a year or more out, it does give you enough time to deal with all the volatility that the market is going to throw your way. The other risk is that if you were to choose the wrong strike price for your LEAPS option, how do you choose the wrong strike price? Well, I did mention this before. You can choose the wrong strike price by choosing a strike price above the current share price. Now, why would someone want to do this? Well, someone would want to do this because the strike prices above the share prices is going to be way cheaper to purchase than the ones that are below. So, out of the money strike price on the LEAPS is going to be way cheaper to apprehend than the strike prices in the money. So here's my summary for you for purchasing LEAPS. The fact that you made it to the end of this video means that you're considering strongly of adding LEAPS options to your portfolio. So if you're going to use LEAPS option in your portfolio, LEAPS should be used if you're looking to leverage your positions with low capital or maximize long-term gains. So it has worked for me and my portfolio, so I'm pretty sure it's going to work for you as well. Just remember one thing: always use your own due diligence before investing.